Good evening. Welcome to Markets Today. I'm Lata Venkatesh. With me is Sonia Shenoy. Well, it was a day which threatened to actually see the Sensex and the Nifty and indeed the Midcaps going down after yesterday's big fall. But actually it was a pleasant surprise. Towards close of day, we had notched up some gains in the frontliners, and more importantly, the mid-caps outperformed and continued the run of high beta. So at the end of the day, yesterday's fall seems to have been a one-day shock, and the market seems to be resuming its uptrend. Hi.
Hi, Lata. Indeed, there was no real trend today, just buying time ahead of expiry tomorrow. So by the end of trade, absolutely flat for the headline indices. But let's tell you about the top headlines today. It was a quiet day of trade. The Nifty hovered in flat terrain, closing with gains of just 12 points, while the mid-caps outperformed with a 0.5% gain.
In stock action today, Bajaj Auto slumps after Nigeria devalued its currency by 8% and raised its interest rates to counter low crude price impact. Rajiv Bajaj told CNBC TV 18 that Nigeria is the biggest export market for the company, but they will pass on the forex impact via price hikes to customers, at least in part. Bharti Airtel also traded 2% lower, impacted by the developments in Nigeria.
And Reliance Capital surged almost 4% on news that Nippon Life plans to raise its stake in Rel Cap A-M-C to 49% versus 26% earlier, with an investment of 657 crores in the first tranche. The transaction values Reliance Cap A-M-C at 7,300 crores.
And here are the experts that we have lined up on the show for you today. Market perspective from Sanjeev Prasad and Sudarshan Sukhani, who will talk technicals as well as give us some strategies. We will also get you the managements of some of the companies that were in the news today, notably, of course, Bajaj Auto's Rajiv Bajaj will be with us.
All right, and straight to the day's trading action then. A volatile session on the Lal Street that ended with marginal gains for the major indices. Anuj is here with us to give us all the details of what took place today. Anuj.
Well, a good day for the market, regardless of the last half an hour volatility, because, the context was that we were coming off yesterday's big weakness, especially in the broader market. Today, the market stabilized. The Nifty made a move towards 8,500, did see some resistance there, but the bigger point was that mid-caps outperformed. The underperformance that we had seen for 3 days, that stopped, and advance decline ratio was positive. So all in all, it has to classify as a positive session for the market today. Let's talk about some of the stocks then. On the gaining side today, right on top was ITC. The biggest loser of yesterday was the biggest contributor on the way up on the Nifty today, 2.5% higher on that one. NTPC was up 1% and Hero MotoCorp was up about 2%. Some other prominent winners included high beta name like DLF, that was up 7%. GAIL was up 3% and Sterlite 2.5%. On the losing side, yesterday's biggest winner, C Entertainment, was the most volatile one today, down about 5% in trade today. Bharti Airtel was down 2.5%, Bajaj Auto 1%. These basically reacting to the Nigerian currency being devalued, and both these companies have significant exposure to Nigeria, so both these stocks were down in trade today. And on the losing side from the heavyweight front, we had stocks like ICICI, Reliance and Larsen & Toubro. And finally, in the mid-cap space, lots of big winners in today's trade. Some stocks that stood out included Anantaraj, JM Financial and Hindustan Construction. Tomorrow, of course, is expiry. The big question is, will it be sub 8,500 or above 8,500?
Oh yes, that's a billion rupee question, isn't it, Anuj? But yes, as Sonia was saying earlier, today was really a buying time kind of day when stocks that fell yesterday were allowed to rise and stocks that rose yesterday saw some profit taking. But overall, I would maintain that the trend was risk appetite was more than risk aversion. I mean, look at the nature of the stocks. Realty was up about 3-4% as an index itself, and within that you had stocks like DLF doing extremely well. But besides that, I mean, FMCG did well because of ITC, but otherwise it was the power index, the metals index, the mid-cap index. Those were the indices, typically the high beta ones that were doing well. And it was the low beta ones, IT and pharma, which actually did badly today. So net and advanced declines, as Anuj pointed out, was in favor of advances. So technically, today you will have to say was a pro-risk day, but then before expiry, you really can't call a trend. So let's get you some market perspective. Here's Sanjeev Prasad of Kotak Institutional Equities, who told us that he expects to see some correction in the market unless there is some concrete reform action from the government. Let's hear about it.
If the government is able to push through a lot more reforms in the winter session of Parliament, which just started a couple of days back, then you could still see some momentum in the market. But if the opposition continues to play hardball and we don't see progress on some of the more important pieces of legislation, such as opening up of the coal sector for private sector commercial mining, then there could be some disappointment coming in. So there could be some correction based on that fact that the government is not able to implement reforms, even though it is very keen to implement reforms, more because of lack of majority in the upper house of Parliament. As of now, people still seem to be very positive. People are more looking at any correction as a buying opportunity. So as long as we see some reforms going ahead, more through the executive route, even if the government is not able to implement reforms through the legislative route, it can still do a lot of reforms through the policy side or the executive side. So we're not seeing the kind of earnings upgrades which the market had assumed earlier. In fact, for 2015, we had to cut our earning numbers after the second quarter 2015 result season. So as of now, I think you could see some disappointment, not only from reform side, but also in terms of earning numbers.
All right, there's some amount of caution there in Sanjeev Prasad's tone, but let's go across to Varinder. He'll tell us about the futures and options space. Varinder.
Well, quite clearly there was huge volatility in the markets today, and that is highly expected. Volumes were also higher, ahead of that expiry tomorrow. If you just see the options data, which remains crucial for the December month, we are clearly seeing some put trending happening at 8400, 8500 level. Market is hoping that 8500 or you could see expiry over 8500. So the signs are there that that expiry could happen over 8500, because you're also seeing call buying. There is buying increase in premium happening at 8600, 8700. So the momentum is there. So let's see, but it's hugely volatile in the market. Clearly high beta, as Lata was pointing, the entire real estate pack was seeing long build up happening in Unitech was the strongest if you're looking out for the mid cap or the pick among the real estate stocks. DLF also was strong, long build up seen over there as well. That stock was up nearly 8%. Ashok Leyland after it lost nearly 6-7% yesterday was up nearly 4%. Strong build up seen over on the long side as well over there. IGL, well, everyone is hoping that there's someone who could come on after today, where the Gujarat gas in the cash market was up nearly 17-18%, but IGL was seeing some buying happening in the futures market. Reliance Capital after that deal was up nearly 4 and 5%. We saw over 10% build up on the long side happening over there. MRF, very good strong set of numbers. The stock was up 4%, long build up over there as well. But two stocks which saw short build up happening was Bharti Airtel and JSPL. JSPL particularly, where we saw nearly 20% build up on the short side. Keep an eye on that one.
All right. Thanks a lot for that, Varinder. But don't go away. Let's speak of some specific stocks as well. ITC surged sharply in trade today, up nearly 2%, pairing yesterday's losses after brokerages gave a thumbs up to the stock. Analysts believe that the ban on the sale of loose cigarettes will not have any material impact on the company's earnings. To give us more on that, Pragya Bharadwaj is joining us. Tell us, Pragya.
Well, thanks so much for that. The rationalization definitely had to kick in because there are some serious practical challenges as far as the implementation of this is concerned. Policing something like the sale of loose cigarettes would be very difficult, and we'll have to mobilize that kind of machinery. So those were some of the concern points that we highlighted through yesterday. The one recurring theme which has come all through the brokerages is that these measures, even if very seriously implemented, will not have any kind of meaningful impact on the earnings or the demand for cigarettes, thus not impacting companies like ITC and its peers in this particular space. I'll take you through a couple of brokerages. Start with Citi. They've maintained a buy rating on ITC with a target price of 405. They believe that the industry always has the option of launching pack sizes which are much smaller in nature, say about 2 to 5 sticks per pack. They also believe that the fragmented roadside last mile retail distribution will make the implementation extremely difficult. They believe that the overhang on the stock price on this kind of negative legislative related news flow and all that uncertainty should now start going down. They feel that in the most negative scenario, at best the retailer margins will go up to just account for the reduced coinage, but that is not a big enough factor to dent the earnings for a company like ITC. Bank of America Merrill Lynch, they've reiterated their buy rating on the stock, target price 401. They also see a case of limited impact on the proposed regulations. They believe that it could have both of those impacts, one being the fact that the reduced affordability for a certain section of consumers could lower the volumes, and on the other hand, more well-off consumers could actually be forced to purchase more cigarettes, thereby negating the impact of a volume decline. They feel that ITC is one of the more attractively priced stocks within the FMCG space, trading at about 24.5 times 1 year forward. It's trading at 20 to 30% discount to the overall, its peers, and on the back of that, they've reiterated their buy rating. So, at least the brokerages, once they put their thinking caps on, not really concerned about what news flow came out yesterday. Back to you.
But some of the other stocks that were in the news today were Bharti Airtel and Bajaj Auto. So staying with the stock in focus, Bharti Airtel and Bajaj Auto shares were under pressure today after Nigeria devalued its currency, the Naira, by 8%. Now this move is likely to have a big impact on Bharti, which generates 30% of its Africa revenues from Nigeria. Rima is here to assess how much of an impact the company will see. Rima.
Thanks so much for that. Another casualty of the Nigerian currency devaluation was Bharti Airtel today. Remember, Africa contributes about 30% to Bharti's total revenues, and in that, Nigeria is the biggest market in Africa. So Nigeria contributes about 30 to 33% of the African revenues, which means overall, Nigeria contributes about 9 to 10% of Bharti's consolidated revenues, which means an 8% devaluation of the Nigerian currency can cause a cross-currency headwind of close to about 80 to 90 basis points, which is why that stock was under pressure. We need to caveat that a lot depends on the kind of hedging policy the company employs. A lot depends on how the 16 other African countries and their currencies move. But straight away on this development, it has the potential to cause a significant amount of cross-currency headwinds of about 80 basis points, which explains that 2% knock that we saw in Bharti Airtel today.
Thanks a lot for that, Rima. But the currency devaluation by Nigeria, like we just told you, will also have a significant impact on Bajaj Auto. Well, Sonia, since you track that stock so closely, Nigeria is one of the biggest export markets for Bajaj Auto.
It is in fact the biggest export market for Bajaj Auto. So clearly there will be an impact. Just to give you the numbers, 35% of Bajaj's exports go to the Nigerian market, and out of the total revenues that they have, 40% comes from exports. So there is a significant chunk. In fact, every month Bajaj sells about 50,000 motorcycles and 5,000 three-wheelers to the Nigerian market. We spoke with the management earlier in the day, and he was not too worried. He did mention that the situation at this point in time is under control. They will, of course, have to pass on this price increase to the customers. So they have raised their retail prices by about 4 to 5%, but they will not change their export estimates for the rest of the year because they believe that demand is still quite robust. So for the month of December, they have already received an order of 50,000 motorcycles and 5,000 three-wheelers to Nigeria. However, the analyst community is not so gung-ho. They believe that demand could get hit as the currency becomes, or rather as the currency depreciates and motorbikes become more expensive for the Nigerian consumer. Let's listen in now to what Rajiv Bajaj had to say earlier in the day.
For the next financial year, for example, a very large portion of our anticipated exports is hedged at a minimum of 64 rupees to the dollar. Okay. So from 60 to 64 itself provides a cushion of, let's say, about 7% or so. So if some of that has to be sacrificed to keep the business going in terms of numbers and the top line, so be it. So I don't feel that the situation is kind of out of control as of now. One part is to pass some of the price increase to customers, and I think all major players have already done that to a large degree. In the past weeks, we have already passed on up to 4 to 5% in terms of retail price change. So I think at least a third, if not half of this, will be accounted for in this manner. The balance, of course, will be shared between the distributor and ourselves.
Right. The centre has hiked the FAR or the floor area ratio to 200 in New Delhi, and this is for all plots size 750 square meters and above. To put it simply, a builder can now construct an additional 4,000 square feet on the smallest plot affected by the notification, which is 750 square meters. Nayantara Rai joins in to tell us how this will impact the realty sector in Delhi. Tell us, Nayantara.
So ahead of elections, you've actually seen the centre under Venkaiah Naidu, the Urban Development Minister, come out with a notification hiking FAR, the floor area ratio, to 200 in Delhi, as you just pointed out. As one broker said, with that additional 4,000 square feet, it tantamounts to about 2.5 new flats per building in New Delhi. The point, though, right now that we all are watching out for, what happens to height? So a builder can build more with the same ground coverage. Therefore, obviously, we're going to see taller buildings in New Delhi. The government so far has not come out with any notification as far as heights go. The other thing is, this is a very disorganized sector in... you don't really have pan-India players in the national capital. It's the local builders that play building builder flats. It's a dead property market, prime areas. We've not been seeing properties actually selling. So we're going to suddenly have maybe more supply. So the good news, and I've been talking to everyone from Jones Lang LaSalle to Knight Frank, is prices are not going to go up in New Delhi.
Okay, right, good for you, Nayantara.
Okay, thanks so much for that. Well, we'll take a break on that note, but coming up, technical chat with Sudarshan Sukhani lined up, and we'll also get you some trading ideas.